Good morning, traders. Sorry about the delay. It's 8:08 a.m. Chicago time on the 23rd of April, 2015. Thanks for joining. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. As quickly as possible, let's get through the news that could be driving us. Both European and Far East numbers came out a little lower than expected. UK retail sales miss. There's an agreement. There's a rumor of an agreement that's coming through. That's coming through with Greece, according to a government official. On that news, the DAX popped up approximately 48.5 points in about a minute. Greece continues to be a key issue ahead of tomorrow's Eurozone finance meeting, while the ECB's said to be getting frustrated with the lack of progress with Greece. It's important that we keep an eye on this. It might be a mover and a shaker tomorrow. I'll show you a DAX chart here shortly to show the kind of reactions the market's having. U.S. initial jobless claims came in at 295,000 versus 287,000 estimated, so worse on both continuing and initial. And in aftermarket, we're expecting Amazon, Google, Microsoft, among others. This morning we had Procter & Gamble and many others I won't cover here. At 8:45 Central this morning, we're looking for U.S. manufacturing PMI, expecting 55.7. And at 9 o'clock Central, just a half hour after the open, we're looking for U.S. new home sales, 515,000 and negative 4.5% expected. At 9:30, we're looking for EIA natural gas, and we're looking for 84 billion cubic feet. And then at 10 o'clock, a very low tier number, U.S. Kansas City Fed manufacturing activity expecting -2. As far as speakers, at noon, we have EU's Tusk giving a speech in Brussels. And that's really it. Tomorrow, excuse me, tomorrow we're getting the German IFO business climate. So if you're trading FTSE, Eurostox, Babel, Schatz, BTAP, all these products, you're going to need to pay attention to that IFO business climate. And then we have U.S. durable goods. And then after that, it's just Bank of Japan governor and a Swiss National Bank. So the week's been really very earnings centric. So that's where we are. Let's see if my charts will work. They're giving me trouble this morning as I transitioned from my home office to my office here in the Chicago Loop. Let's see where we are. Yeah, it looks like they're still loading. Unfortunately, this may be a deal breaker here. I figured I'd give it a shot, but the charts are still loading data. I had to reload my data this morning. Overall, I'll give a kind of on the fly look here at the market. Like I said, unfortunately, my charts are not working so far. So hopefully they'll be up and running by the time I start to look at the trading day. 1 second, I'm going to pull up ESM5 chart on my trading platform directly instead of my charting platform on a separate computer, and just give you a hypothesis and call this a day. All right, well, it does not look like I'll be able to do that. Let's see, do I have control? Do I have control? Do I have control? You can see this little pop here in the DAX, this fast push up, this starting with 11.727.50 up till 11.845 or so. That was on the Greece news. Unfortunately, it looks like this thing is not up and running, and I don't want to keep you waiting here. Oh, we've got, it's alive. My Frankenstein's alive. All right, so this is what we did yesterday. I'm so glad this worked. Here we go. Let's share a desktop. You should be able to see it. All right. So yesterday we opened in range in value. The idea for yesterday was for it to be to look for a choppy open, looking for responsive selling early on the open, which we got. So the expectation yesterday, since it opened up here, the expectation is for it to drop and test the gap and the naked point of control. And it did just that. It went right to 2091, the gap right off the open, um, and rotated up. We had a nice 3.75 point rotation there. But then it fell right through, and then the next test would have been this the prior day's low. It stopped the tick before it. So what does that tell us when we go and move right to the gap, or move just a tick ahead of the prior day's low? What is that an indication of? The This is one of the one of the clearest indications we have that a short time frame the short time frame traders are in control. In other words, there isn't a high time frame playing in the market, because higher time frames do not look at generally will run through prior days levels when an institution is executing in the markets. Generally, they're not interested in where yesterday's close was. That's a clear indication that we have short-term traders. Why do you care if they're short-term traders in control or not? Well, that helps inform your trading or your trading plan for the day, in that it helps you see that it's not likely to trend. Short time frame traders uh, do not generally cause trends. They can on the close if they are heavy on one side, if they're holding a lot of inventory before the close, and that's why I don't fade, or I don't trade against the trend in the closing range in the last 20 minutes of the trading day, because balancing that inventory because of margin calls and so forth can force those people out. So but in general, when short time frame traders are in control, I look for trades that are excessive, that I can take back, to the mean, or to I'm trading from the outside in. I'm looking to fade big trades. Um, and eventually what that does is it costs you, because there's a point where short time frame traders get so out of balance that a push forces the market to move far enough to bring an intermediate time frame trader into it. And if that's the case, then you take a loss on that trade, and it is what it is. We saw an intermediate time frame trader step in from the low, and we saw him step in once we got back into the prior day's range. We saw them step right back in. Looks like my charts are locking up again. We saw them step right back in, and they took it right up to the IB high. Then they step off the gas, and here you have short time frame traders. Look at these rotations. You have an 8.75 point rotation without a 6-tick counter rotation. So this from 87.75 to 96.50. You have a sustained push without a single 6-tick pullback. And then from that point on, what do we have? 2.5, 2.25, 2.5, 2.25, 1.75, 2.75. Remember, the harmonic, we're looking at a clear example of what the harmonic is for the ES. The harmonic is 2.5 to 3 points in the ES. This shows short time frame traders back in control and taking positions, and that helps build this high volume node here. As this high volume node builds, as these short time frame traders trade and trade and trade and trade, eventually one side or the other is likely to be wrong or be pushed out, and so we're looking for a break away from that, and then we get this 4.75 or more move. It's about a 6-point move from the IB high to near the high a day. We finally push into this 2103.75. We one-ticked yesterday. We one-ticked the prior day's high and had a failed auction. You can see sellers stepping in very hard on fairly hard on that failed test, and then the market falls back in to where the point of control is. So yesterday we ended up with a profile that has multiple distributions, and overnight it just could not stay up there. So if we look at the overnight session, remember we had disappointing PMI data from China and others, as well as Europe, and UK sales was disappointing as well, with a small pop based on the Greek news right here. So overnight, just unable to, the failed auction continues. This failed auction is essentially a trend going the other way that ran out of time. The expectation is for it to continue lower. The target would have been for the failed auction would have been 96, but it has pushed through that and has built a profile in the middle and is balancing in the middle. So overall, this profile overnight is not telling us very much other than the market has tested lower, has tested higher, lower, and is stuck in the middle. Again, we're looking at a market that's opening in range, probably in value. So look for a balancing type opening or a choppy type opening until somebody takes over. The expectation for this morning is that it's, oh, by the way, there's a new MC that's built based on the last 3 days. The last 3 days have been balancing, so we build a new MC, and you can see right here that we're opening right up against the MC point of control, 93.5. So early on, I'm looking for the market to attempt lower, push to 93.5, attempt into this 92, 91 area, and then I'm looking for it to turn up and test 99 and push into the naked point of control, as well as the gap. So my primary idea, even though the primary and the secondary hypothesis have about equal probabilities playing out, I don't see a much higher edge one way or the other. The most likely scenario is it gets pulled into 93.50 down through to 91, and then we're looking for it to rotate up into the 2100 area. But this morning's trade is expected to be choppy, so be cautious. We are opening in a balanced zone. And then, so the profile here has 3 prongs, 2101, and then the point of control at 93.50, and then 91. So that's why I'm expecting it to push down into 91, turn up, and then push to the other side towards 2100, probably settle somewhere in the middle to rest. And then it's likely to be a pretty quiet day today. That's what I have for you. I've run out of time and I'm over my time here. It's 8:21. I'll let you get ready. I need to get ready for the market open. Apologize about the delays and stuff. It's just as I refine this process of doing these broadcasts, it beats the heck out of the days whenever it was 2 years ago when I'd type all this stuff out on Twitter. As I refine these broadcasts, I run into glitches and I try different things, and until you fail, you don't know what your limits are, and that's basically what I'm doing with this technology. Good luck again. Trading is not a very complex thing. It's really about coming up with a plan, refining it down to very simple things you need to look for, and then executing on those simple ideas when it happens. So pay attention to that, manage your risk, and hopefully you'll do well.